Okay, let's be honest. Trying to understand health insurance can feel like learning a whole new language, right? So today, we're going to make you fluent. We're going to break down what it is, why it's so incredibly important, and the key terms you absolutely need to know. Let's dive in.
First, think about this for a second. What's the one unexpected bill that could literally wipe out your savings overnight? It's probably not your car breaking down. For millions of people, the answer is a sudden medical bill. That's the kind of expense that can be absolutely astronomical.
And that is exactly where health insurance comes in. You can think of it as a financial safety net. It's basically a contract where you pay a predictable amount of money, and in exchange, the insurance company agrees to cover the bulk of your medical costs if something happens. It takes that huge, scary, unknown risk and turns it into a manageable expense.
So we know what it is, but why is it such a fundamental part of our lives?
Well, it really boils down to two huge things: peace of mind and financial protection. Just knowing you won't go broke because you got sick or had an accident is everything. It means you can actually get the care you need when you need it without panicking about the cost.
Now, when you start looking into it, the options can feel totally overwhelming. But here's the good news. Almost every single health insurance system in the world follows one of two main paths. It's either private or it's public. So on one side, you've got private insurance. This is the kind of plan you might get from your job or one you buy for yourself. And on the other side, you've got government-funded insurance, or public health care, where the government uses money from things like taxes to provide coverage for its citizens.
Let's dig into the private path first, because for a lot of us, this is the world we deal with day to day, either through work or by buying a plan on our own.
So, where does this private coverage actually come from? Well, it usually flows from one of three main sources. The most common is employer-sponsored insurance. It's part of your benefits package. You can also just go out and buy a plan for yourself. That's called an individual plan. Or you can get a family plan that covers you, a spouse, and your kids all under one policy.
Okay, now when you're looking at these plans, you're going to see a lot of acronyms, but two of the biggest are HMO and PPO, and this slide really gets at the core trade-off. Think of an HMO, a health maintenance organization, as a bit more restrictive. It usually costs less, but you have to use their network of doctors, and you'll need a referral to see a specialist. A PPO, a preferred provider organization, gives you way more freedom to see pretty much any doctor you want without a referral. But that flexibility, it almost always comes with a higher price tag.
All right, let's flip the coin and talk about that other major path, the government-funded or public health systems.
The whole idea behind these systems is often what's called universal access. The goal is to make sure every single citizen can get the medical care they need no matter how much money they have. And to make that happen, these systems are usually paid for by everyone through taxes or other required contributions.
And this isn't some rare or niche idea. This is a global standard. The details are different everywhere you go, but the basic principle is used all over the world. You see it in places like Canada, the UK, Brazil, and Japan. The end goal is the same: healthcare for everybody.
Of course, no system is perfect. There are always trade-offs. So let's take a step back from the whole private versus public debate and just look at the fundamental pros and cons of having health insurance at all.
So here's the bottom line. The huge, massive benefit is that financial protection and access to care. But the main drawback? It's the cost. Those monthly payments, called premiums, can be really expensive. And even with insurance, you often have to deal with network limitations, which is just a fancy way of saying you can't always go to whatever doctor or hospital you want.
All right, for our last section, we're going to give you a toolkit. Let's decode the three most common and honestly most confusing terms you're going to see. Getting these is absolutely crucial.
First up, the premium. This one's pretty simple. Think of it like your monthly subscription fee for healthcare. It's the fixed amount you pay, usually every month, just to keep your insurance active, whether you go to the doctor or not.
Next, the deductible. Okay, this is a big one. This is the amount of money you have to spend out of your own pocket on medical care before your insurance company starts to pay for anything. So if your plan has a $1,000 deductible, you are on the hook for that first $1,000 of medical bills each year. After you hit that mark, then your insurance kicks in. And finally, the copayment, or just copay. This is a flat fee you pay for a specific service. So your plan might say you have a $25 copay for a doctor's visit, or a $100 copay for a trip to the emergency room. It's just your set cost for that particular service.
So now, you've got the lingo down. You are way better equipped to look at any health plan and really understand what's going on. So I'll leave you with this final thought to put it all into action. Now that you know the basics,
What's the first question you're going to ask about your own health plan? Thanks for watching.